Yo, what's going on, guys? It's Standout Trading. In this video, I'm going to be showing you guys my Elliott wave analysis on Bitcoin and the Nasdaq. We're mainly going to be looking at my macro outlook for the both of them. I did find some new Elliott wave counts that I wanted to show you guys. I'm always trying to find new counts because it's always good to stay objective and not just stick to one bias the whole time. As new price data appears on the chart, sometimes things get easier to read. So that's why I'm going to be showing you guys these new counts that I'm looking at. I'm also going to be comparing it to the previous counts that I've shown you guys on my channel for the Nasdaq and Bitcoin and show you guys which scenario seems more likely. First, I'm going to start off by looking at the Nasdaq on the weekly time frame. This huge move up I have labeled as Supercycle Wave 1. Supercycle waves typically take 40 to 70 years. Sometimes they can be a little shorter or longer. As for this was only 15 years, followed by a very deep Supercycle Wave 2 only taking about 3 years. So sometimes you will get something called balance through alternation, where you do get a short and deep Supercycle Wave 2, but then Supercycle Wave 4 will be very time lengthy and be very sideways. So it may correct as any type of flat, triangle, or double or triple three. That will typically appear in that Wave 4 when that Wave 2 is very sharp and short in time. So I still believe that we are in this Supercycle Wave 3, but this is a new count that I'm going to be showing you guys. I have not shown you guys this on my channel, and I really just redid my whole entire count on the Nasdaq to try to view it as objectively as possible, and I really do believe that this count has a very nice look. That is why I am showing it to you guys today. So to start off, within this Supercycle Wave 3 that we are in right now, there was 5 waves to the upside at the primary degree to complete Cycle Wave 1. Within cycle waves, there are primary waves, and then within Cycle Wave 2, there was a primary degree expanded flat. Within an expanded flat structure, there's always going to be 3 waves in Wave A, 3 waves in Wave B. Wave B always takes out the origin of Wave A. And also within an expanded flat, Wave C always takes out the ending level of Wave A. So this is kind of what this structure looks like. Wave A and B can be any correction style, except Wave A cannot be a triangle pattern. Wave C must be a 5-wave structure. It may be in the form of a classic impulse or a diagonal pattern. If it's going to be a diagonal, it must be an ending diagonal. So within this primary Wave A, there was a running flat structure, which is exactly the same as an expanded flat, except this Wave C always stays above the ending level of Wave A. So they're very similar. So you have a running flat in Wave A, a double zigzag in primary Wave B, followed by 5 waves to the downside in primary Wave C with a truncated Wave 5, which is when there is 5 waves to the upside, and Wave 5 fails to terminate beyond the ending level of Wave 3 right there. Usually this occurs after a very sharp move in one direction. So as you can see right here, there was an extreme move to the downside for Wave 3, followed by a double zigzag for Wave 4, and then a very short Wave 5. This will occur when you do get that insanely strong move to the downside or in the upside direction. So that completed Cycle Wave 2 right there. Then it did go up for Cycle Wave 3, which I believe in this count it has topped out. And then we are correcting for Cycle Wave 4, which will be a multi-year correction. So this is really not the best thing for the Nasdaq. It means that we're not going to see all-time highs soon at all, but there are some things that we could look at, and there are still different scenarios. So I'm not totally set on this scenario. I'm going to show you guys the different scenarios as we get on in the video. Now, after that Cycle Wave 2 bottomed out, it went up for primary Wave 1, which was just a regular impulse wave. Within Elliott wave theory, waves 1, 3, and 5 must always subdivide into another 5-wave structure. So there was 5 waves at the intermediate degree. This was for primary Wave 1. Then it did correct for primary Wave 2, which was the exact same correction style as this Cycle Wave 2. As you can see up here, there was an expanded flat in intermediate Wave A, and then it went up for intermediate Wave B, followed by 5 waves down in intermediate Wave C, except in this one, this was a running flat, sorry, not an expanded flat structure. After this primary Wave 2 was finished, which lasted 343 days, it went up and set another 5 waves to the upside for primary Wave 3. These 5 waves were at the intermediate degree because it was within that primary wave. And then it did correct for primary Wave 4, which the structure was a running flat, which again is when it makes 3 waves down in A, 3 waves up in Wave B, followed by 5 waves down in Wave C. Wave C stays above the ending level of that Wave A though, unlike in an expanded flat where it goes beyond that ending level of Wave A. So within an impulse wave, when you draw a trend channel from the height of Wave 1 to the height of Wave 3, parallel down to the bottom of wave 2, the target for that wave 4 is going to be that lower trend line. So as you can see, it just landed around that same general area before having a huge reversal back to the upside for primary wave 5. And this will typically occur, that it does land at that lower trend line and then goes on to set that next impulse wave to the upside. Also, you can see here it did hit the 0.236 Fibonacci retracement level, which may be a target for a wave 4. Typically it will hit that 0.382, but it may also hit the 0.236 and the 0.5 Fibonacci retracement levels. As you can see, for this primary wave 2, this was obviously a very shallow correction, but this isn't anything out of the ordinary, as we historically see in intermediate wave 2, even minor wave 2. All of these wave 2s back here really were not deep retracements. Usually for the indexes, they don't have insanely deep wave 2s to the downside, though that can occur. That's usually what does occur in Elliott wave theory. It just seems that it's not that common for the Nasdaq. Another thing that I did find interesting is if you draw the Fibonacci extension from the origin of wave 1 down here, we're talking primary wave 1, up to the height of primary wave 1, down to the bottom of primary wave 2, you could see that this primary wave 3 got up to that 1.0 level. Now within Elliott wave theory, wave 3 may never be the shortest wave, but it does not have to be the longest. So as you can see, wave 1 and 3 were very similar in length, though wave 3 was a little bit bigger, and then it did correct for that wave 4, which took 539 days. So it did take a little bit longer than this primary wave 2, but it's still kind of in the same general time frame. I think that it does have a good look because it does follow that trend channel right there. So when wave 1 and wave 3 are very similar in length, though wave 3 always must be a little bit bigger, then it usually indicates that wave 5 will extend. So the next thing that we would do is draw the Fibonacci extension from the origin of wave 1 to the height of wave 3 down to the bottom of wave 4. The target for that wave 5 would be the 1.618 extension, and this typically occurs when wave 1 and wave 3 are equal in length. Wave 5 will extend to the upside. So this wave 5 was bigger than waves 1 and 3 combined. If we do take this off of log scale, you can easily tell that this wave 5 was much bigger. It's just much easier to view on the log scale when there is exponential growth on a chart such as the Nasdaq. So here's where things do get a little bit interesting. So after that primary wave 4 bottomed, it went up for primary wave 5, which nearly hit the 1.618 extension, which is the target for wave 5. What this would indicate is that cycle wave 3 is complete. So this indicates that we are in a multi-year correction for the Nasdaq, and the targets are anywhere from 8.8K to 10.7K. Now you might be thinking, well, we're already close to there, so maybe we could bottom out and go on to set this wave 5 to the upside. But my thought process is, if it is going to play this count out, we should see a bottom relatively soon for this primary wave W, followed by a retracement, which takes a similar time period as this entire move down. Now sometimes wave X's will be 50 to 61.8% the time of that wave W. That's also possible. Still looking for a similar time frame for this wave X to correct before another move to the downside for that wave Y, which will be again in the same time frame. So if this scenario plays out, we're really not looking for a bull run for the Nasdaq for at least a year or two, and it could also be a few years. So if wave 4 is going to be 50% to 61.8% the time of this cycle wave 2 back here, we're looking at a bottom June 2023 to around, what is this, November 2023. So really not for a while. If it's going to be equal in time, we're looking at a bottom December 2024 or January 2025. So you're really not looking for a bull run for a while, though you can get a retracement back to the upside before seeing that next leg to the downside, which again will be a similar time frame as this entire move down. Like we previously discussed for these primary waves over here, when you do draw a trend channel from the height of wave 1 to the height of wave 3 down to the bottom of wave 2, typically wave 4 will hit that lower trend line. If we do the same back here and draw the trend channel from the height of wave 1 to the height of wave 3, parallel down to the bottom of cycle wave 2 down here, you can see that this lower trend line is around that 0.5 retracement level. So that may indicate that wave 4 is going to fall all the way down to 8.8K before we get that wave 5 to the upside, which will likely hit that upper trend line again. This would complete super cycle wave 3. So here's the scenario which I previously showed you guys on the Nasdaq, where it is still in this cycle wave 5 to the upside. So basically you have cycle wave 1, 2, 3, and 4 complete. Within cycle wave 5, it's in this primary degree impulse to the upside right now. So if this is the case, we should be seeing a bottom relatively soon. I think that it still has a little lower to drop, but anywhere between this 11.8K to this 8.9K, this primary wave 2 will likely bottom before going on to set primary waves 3, 4, and 5 to the upside. So now you might be thinking, well, Dan, you have the same target area for primary wave 2 and cycle wave 4. What's the difference? The difference is that primary wave 2 would be much shorter in time. We're talking about a bottom over the course of the next few months, whereas the cycle wave 4 would be the next 1 to several years. So in either scenario, I am seeing a double zigzag to the downside from these highs, and we should see a reversal in this area anywhere from 9.2K to 11.5K. In this area, we will either see 5 waves to the upside, followed by a wave 2, and then it goes on to set those next 5 waves to the upside. In that case, we would be in this scenario where we are in this primary wave 3 to the upside. If something like this occurs where we're just in this corrective wave and there's a bunch of overlapping waves, it starts to look like a double zigzag back to the upside, which is very common nowadays. In that case, I would look for it to just retest these resistance levels before another 3-way move to the downside. We cannot be sure of which scenario plays out because these are both possibilities. So we really need more price data on the chart to be able to have a good understanding of which scenario is going to play out. In either scenario, like I said, between 9.2K and 11.5K, we should get this move back to the upside. Depending on what that structure looks like really depends on which count it plays out, whether it plays out primary wave 2 right here or this cycle wave 4. In my opinion, I really do like this cycle wave 4 correction because it just has really good proportion compared to the other counts. So again, either scenario is possible until we see this retracement back to the upside. Depending on what that structure looks like will depend on which count plays out. Now the big question is, okay, Dan, well, what happens with Bitcoin if the bearish scenario plays out? Now I did do a few different Elliott wave counts on this, but I've realized that this looks the best labeling this a cycle wave 1 rather than a super cycle wave 1 due to it only lasting 7 years and this cycle wave 2 only lasting about 1 or 2, rather than labeling this a super cycle wave 2. That wouldn't make too much sense to me. But here we do have 5 waves to the upside for cycle wave 1, down for cycle wave 2, which was a pretty deep retracement. Now it is going up for cycle wave 3. Now I do have reasons to believe why this is still a primary wave 4, but we do have to stay objective, and if the stock market is going to be in a cycle degree correction, then maybe it's more likely that was a wave 5 and it is correcting for this wave 2 right now. So in this scenario, we do have 5 waves up at the intermediate degree. This topped out primary wave 1. Now we are in a primary wave 2 correction. The first targets are going to be anywhere from 10.5K to 17.1K. If it does start to break through those levels, then we do have anywhere from 4.5K to around 10.2K. It is more likely that it does stop at these first ones, but it's a primary wave 2. It could get as deep as these levels down here. Now, what if it does play out this diagonal structure that I'm showing you guys? That does not mean that we are just completely in the clear yet, because let's say it does play this out where this is wave 1, 2, 3, it's going up for wave 4, then down for wave 5, and then we do start to see a break of this upper trend line. Everyone gets excited, but then it's just a corrective wave back to the upside. So what we need to see if it's going to play out the bullish scenario is we need to see it go up in 5 waves, down in 3 waves, and then we see a big 5-wave impulse off of those lows. This is not confirmed until we start to see impulsive structure off of these lows. If it starts to look corrective, then this is still a possibility. So even if it does play out this diagonal structure, it still has the potential to go down to set this intermediate wave C, and that could just be an intermediate wave B. Now if it's going to play out the bearish scenario, here is also a possibility that I'm looking at, where basically we are in a double zigzag to the downside for intermediate wave W. Let's say the price just continues to flush to the downside. It's really not looking like it's going to play out this diagonal structure, which I've showed you guys. Then here's the next scenario that would be most likely. You have anywhere from 20,000 to 26,000, where maybe we are in this 3-wave move for wave Y. This completes intermediate wave W. Then we get this retracement back to the upside for this wave X. That would be when we're in the retracement back to the upside for primary wave X for the Nasdaq. And then it goes down and still sets those 3 waves to the downside towards these lower targets. In both of these scenarios, it does have these same targets where you have first from 10.5 to 17.6, with another level of resistance right in that area, or in the very worst case, it could get down to 4.5K to around 10.2K. Those are both possibilities. So I think that both of these counts do have nice looks, but I still don't really like the fact that we do have a short wave 5 and it kind of looks more of a three-way move to the upside. So I'm still considering this as one of my main counts, and this is definitely a possibility, but we do have to stay objective and look at all of the possible scenarios that could play out in the charts. So to break it down real quick, the way that this scenario is not going to be likely is if Bitcoin just continues to flush to the downside. If it starts to play out something like this, which we have talked about previously a few weeks ago, where it plays out this fractal from over here, where this is just the retracement back to the upside, and it just continues to just bleed to the downside, then this count is not likely. Now let's say it does play out this count and goes up for wave 4 and down for wave 5, everyone gets excited, but it does start to look corrective, then this count wouldn't be likely anymore and it would play out this count. So I'm looking at all possibilities. I think all of these counts do look pretty good. Now, due to me finding this really good looking count, which I believe has a good chance of playing out unless we do get that impulse wave off of these lows down here, and it proves to me that it's in this cycle wave 5 still, it does lower my confidence a little bit of Bitcoin still being in this primary wave 4, but I am still considering it one of my main views of me looking at Bitcoin right now until it proves to me that it's not likely, because I do believe that this count still does have a really good look, but I believe that these counts would also have pretty good looks. So to me, it's just a waiting game. If you guys enjoyed this video, make sure you drop a thumbs up. If you guys want me to go over some of these bearish case scenarios on the altcoins, definitely drop them down below because I will do that. If you guys enjoyed this video, make sure you guys subscribe and have them notifications on so you can get alerted for amazing setups just like these ones. Have a good one.